All right, welcome everybody. It's just gone midday in London in the United Kingdom, 27th of January 2017. Momentous day for a gentleman on the other side of the world, literally. I'm broadcasting from the New Forest National Park. My name is Gavin Holmes. I'm the author of Trading in the Shadow of the Smart Money, and I'm the Chief Executive Officer of Trade Guider Systems International. And I'm very, very pleased to be here to officially launch the latest book, the new book, and the first book by Danny Younes, a trade guide customer of several years who's now become a team member. So a true success story. And having read this book a few times, having used some strategies from this book for our hedge fund, I can tell you that you're in for a very, very good piece of information in the next hour or two. So don't leave. We are recording it. We will put this on our Trading the Markets VSA Club YouTube channel. But for me, I certainly want to congratulate Danny on a fine piece of work. It was just a great shame that the late Tom Williams, who passed away on November the 7th last year, isn't here with me to celebrate this. But he did. Tom did have read to him some of Danny's work, and he was very impressed at the time. So I know I can speak for Tom. He would be extremely proud of this moment as well. And I'm quite sure he's looking down on us today. Now, the book is called Supercharge Your Trading and Investment Account Using Wyckoff Volume Spread Analysis. I'll talk a little bit more about it in a second, but really today's presentation is all about Danny. He's going to share with you some strategies that maybe you've never heard of. I know that I've been with some very good big traders the last few weeks, and I've discussed these strategies with them, and many of them did not know about these strategies. Doesn't matter what you trade, by the way. I mean, we talked, when Danny first wrote the book, he didn't have the word trading account. He just used the word investment account, and it was actually one of our customers and somebody that, again, works with the team who emailed Danny back and said, well, actually, the principles, everything that you're in your book will work for Forex. They'll work for futures. They'll work for stocks. And, you can trade options on gold and silver. So whilst Danny is discussing options for stocks in the book, of course, you can trade many other options in the market. So it's a book for everybody. It really is. Doesn't matter what level your trading is either. Whether you're experienced with volume or whether you're not, Danny takes you from the basics, handholds you through the key principles, talks about the media, talks about the manipulation, talks about brokerage firms. I mean, it's I had to say when I first read the first version of Danny's book, it was a little bit harsh, certainly against some of the Forex firms out there, but he softened it a little bit, and rightly so, because again, what we're here to do is we're never here to criticize any other businesses. We don't always agree with the way other people do business in this particular industry. There is snake oil salesmen out there, but we're here to show you the truth, and that's what we do, and that's what this book is going to do for you. It's going to show you the truth about the market. Now, as always, before I start, because Danny works with us and we're registered, I still want, even though we're not doing live trading today, I do want to read this important disclaimer to you. Trading stocks, options on stocks, futures, options on futures, and retail off-exchange foreign currency transactions, Forex, involves substantial risk of loss, and it's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guider Limited is an authorised representative of Forex Max Limited, and we're regulated by the Financial Conduct Authority in the United Kingdom, number 229906. So without further ado, this is the book. This is the PDF of the book, which will be made available today. In the next few weeks, it'll be available on Amazon as a printed copy as well. But the PDF is full colour. I've printed it out. Didn't take much of my ink, I'm pleased to say. And it's called, as you can see, Supercharge Your Trading and Investment Account Using Wyckoff Volume Spread Analysis. And a lovely dedication there from Danny, which talks about who he's dedicated the book to. And he says to his wife, Georgette, and 3 children, Nicholas, Jacob, and Joshua, thank you for giving me the strength to keep on going. Yeah, I can sympathise with that. You guys are my rock. Yes, I have to say, when I was writing my book, you do need strength to keep going. I'm in the process of writing my 3rd book, and it isn't as easy as you think. It takes, if you think it's going to take a month, it's going to take 6 months. If you think it's going to take 6 months, it's going to take 2 years. If you think it's going to take 2 years, it's going to take 5 years. Don't know why, just that you get these writer's blocks. This is what I wrote for Danny after reading the book a couple of times, both the first iteration of the book and then the latest one as well. So it says here, forward by Gavin Holmes, author, Trading in the Shadow of the Smart Money. I had the good fortune to connect with the author of Supercharge Your Trading and Investment Account using Wyckoff volume spread analysis, Danny Younes, several years ago as an aspiring student of the works of the great traders and investors Richard D. Wyckoff and the late Tom Williams, who passed away just before this book was published. Danny became a customer of Trade Guider Systems, the company that owns the Wyckoff volume spread analysis trading and invested methodology that Danny shows you in this book. Danny attended many courses and webinars and was personally coached by Tom Williams and myself. So I'm extremely proud of his achievement with this work, which I know Tom would have been extremely proud of as well. As an author myself, I know how difficult actually writing a book is, but I can say without a doubt that Danny has produced in this work one of the finest books on the Wyckoff volume spread analysis trading method currently available. In Supercharge Your Trading and Investment Account using Wyckoff volume spread analysis, Danny goes well beyond the basic principles of the Wyckoff volume spread analysis method by introducing trading strategies using options that can be used once a stock has been located as a possible buy or sell based on accumulation and distribution. As with anything in life, you need to be motivated to achieve your goals. And Danny reminds us of this in each chapter with very poignant quotes from Les Brown, Eric Thomas, Tony Robbins and Steve Jobs. Trading and investing in the financial markets has never been easier to access, thanks to the internet, and more retail traders are getting involved from all over the world. In the book, Danny explains in detail the traps that get the uninformed herd traders into bad positions and shows through detailed charts and news clippings how the mainstream media is used to wrong foot this group into making very poor trading and investment decisions. Danny's experience trading options is extensive, and he explains in great detail strategies that you can use right now to grow your account and mitigate your risk by insuring your positions, something many traders and investors will be totally unaware of. The book is easy to read, and the charts clearly show the key principles that all traders and investors should understand before they risk real capital in the markets. Danny generously shares with us his personal trading plan at the end of the book, and this really brings the book together perfectly so the reader can take immediate action on the knowledge they have received. As you can hear in the background, my dog Honey also read the book and does approve. Now, talking about motivational quotes and motivational speaking, I want to play to you, if I may, if I can get it to work, which I won't be able to right now, but it doesn't matter. I brought one of these Amazon Echoes, which are actually quite a good little piece of kit. And in the Echo, you're able to ask each morning for words of motivation. And I was listening this morning, and in fact I listened over the last week to several quotes, and Danny in his book very cleverly, and this is one of the things I like about the book, he goes at the beginning of each book, of each chapter, he talks about statements, and in fact this is the one that was read to me this morning. It's actually an excerpt from the very famous speech by Steve Jobs before he passed away from cancer. And this is something I'm going to read before we start today's session, because I think for me it sums up what my life has been about, and I think Danny will probably say much the same, because we live for the day and we have what's called the future and we have the past. We can remember a lot of things about our past, but of course looking into the future, often we look into that sometimes with dread, especially after what's happened in 2016, lots of negativity around. And yet, you know something, when you live your life, it's like driving a car. If you drive your car and you're going 50 miles an hour on a road and you're looking in the rear view mirror at the back, you are going to have a crash because you're not focused. So you don't drive your car looking in the rear view mirror. But many people that are depressed or having trouble in their life are doing exactly that. They're continually driving a vehicle, looking in the mirror and having all the regrets about things that they look at in the past, because you never, ever will be a human being without making a mistake, including in the financial markets. In fact, it is your rite of passage to make mistakes in the market. If you don't make mistakes, you're perfect, and there's no such thing as a perfect human being, and yet I've still yet to meet one. So I'll just read this to you, and then I'm going to hand you over to Danny. This is from Steve Jobs. You can't connect the dots looking forwards. You can only connect looking backwards. So you have to trust somehow that the dots will connect somehow in your future. You have to trust in something, your gut, destiny, life, karma or whatever. Because believing that the dots will connect down the road will give you the confidence to follow your heart, even when it leads you off the well-worn path. And that will make all the difference. Your time is limited, so don't waste it living somebody else's life. Don't be trapped by dogma, which is living with the results of other people's thinking. Don't let the noise of other people's opinion drown out your own inner voice. You've got to find what you love, and that is true for your work as it is for your lovers. Your work is going to fill a large part of your life, and the only way you're going to be able to be truly satisfied is to do what you believe is great work. And the only way to do great work is to love what you do. If you haven't found it yet, keep looking and don't settle. Have the courage to follow your heart and intuition. They somehow already know what you truly want to become. Steve Jobs. And with that, that's a perfect introduction to somebody who has followed his heart, has written a book, and he's now going to explain to you why and why it's going to help you to make it in the market. So I'm very proud to introduce you to your speaker today, Danny Younes. Danny, over to you and well done, mate.
Thank you, Gavin. Thank you very much, mate. Yeah, g'day, folks. Yeah, this journey that I took writing this book, I've been wanting to write this book for quite some time. And I've had setbacks after setbacks, as Gavin well knows. And and I went through a time which I don't wish upon anyone really. And but I just kept on seeing what I wanted to be, even though I wasn't there yet. But I was visioning, and and every day I would think about, yeah, I want to write this book, and and my wife and my kids, they've played a big part of it. They're the reason why I wrote this book and do the things that I do in my life. And yeah, and that time where I was going through some rough parts, I've overcome, and the best way to overcome a hurdle or a tough time is just vision what you want, put it out there, and focus on it. Don't look back and say, but I can't do this, but this such and such. Just go for it. Okay, so all right, Gavin, have you allowed me to share my screen?
I have now, so you can try that.
Okay.
That should work.
Okay. Yep. All right. So you should now be able to see my screen with the cover of the book and the title. Just let me know if you can.
Yeah, got it, Danny.
Cool. Cool. So today what I want to do is basically go through the following: why I wrote this book. Okay, I want to share something with you which is called a lifestyle matrix. Now, I didn't include this in my book, but I'll probably provide it as an update. But I want to quickly run through it today. I'm going to go through how to produce an income on a weekly or a monthly basis on your share portfolio. Okay, I want to go through how to insure your shares, how to buy shares at wholesale price. Did you know that you can buy shares at wholesale price? I bet a lot of you don't know that. How to implement the VSA methodology with options. And I want to quickly go through my stock selection criteria as well. Okay, so let's get started here. Okay, so why did I write this book? Okay, so the reason why I wrote it was not many people are educated in options. Okay, they don't understand them, and they don't understand the power they really have. All right, a lot of people just buy shares and just hold on to those shares. And yes, you can make money just buying and holding shares. But what happens if that stock plummets? Okay, what happens? A lot of people say, you know what, we'll just leave it for the long term. You know, just leave it for the long term. It'll come back. But what I point out in my book was a perfect example of BHP. All right, so during, like just before the GFC, BHP reached a high of around about $45. Okay, it had broken a resistance level, and there was a positive news announcement that a Chinese person was going to buy a stake in BHP, something along those lines. Okay, so it was positive news. So we saw a break of resistance, and then the GFC hit, and the stock plummeted right down to $18. Until this day, the stock has not gone above $45. It's still, I think, it's trading around 30-ish or so, but it hasn't gone back up to the highs back in 2008. Now, a lot of people who would have bought the stock, and I can guarantee you that funds and retirement accounts or self-managed super funds, they purchase blue chip companies, and BHP is a blue chip company. All right, so they're probably still holding onto that stock. Okay, but did you know you can actually monetize your stock with options? Let me know if you can. Let me know if you know that you can monetize your stock portfolio with options. Just give me a yes or no. So Y or an N. I just want to get a feel for the guys. See who. So there's some saying yes, a lot are saying no. Okay. So a lot are saying no, and some people never trade stocks or options. Okay. So it's I think there's more no's than yeses. Okay, so the BHP example that I'll go through in my book perfectly sums it up. Okay, a lot of traders and investors turn to high risk trading, right, and blow up accounts. Okay, so there's a lot of people who trade who use their after-tax dollars to invest in high risk, trading. Okay, and high risk trading is futures, forex. That is high risk, trading. Right. The trading strategy that I go through in my book is a low risk strategy. Okay, and I'm going to show you through my lifestyle matrix how you should set yourself up so that you can fund your lifestyle. Okay, so I'll get to that in a sec. Traders and investors have no idea how to monetize their stock portfolio. You've been able to monetize your stock portfolio since the 1970s. This has been around since the 1970s, and not many people know about it. Most traders and investors have no idea about protecting their stock portfolio. All right, so I'm going to run through that. Most traders and investors have no idea how to recover their losses if their stock plummets. I'll also cover most traders and investors get in onto a trade because of a hunch or a tip and have no defined plan or checklist. Now, I've got a funny saying that if the taxi driver is giving you tips to buy a stock or whatever, you should do the exact opposite. Okay, so that's probably getting towards the highs of the in the market once taxi drivers and the so-called friends and family to say, no, invest in this, invest in this. The runs happen, it's going to turn. So so I'll go through a stock selection criteria, okay, which makes your trade a higher probability in being a successful trade. Okay. And there are educators out there that are charging an arm and a leg for this sort of information. Okay, there's educators that charge between $5,000 to $7,000 for this information that is contained in this book. But their setups are all based on mathematical formulas, right, such as the MACD, RSI, Bollinger Bands, and so on. Right, they do work, but most of the time they don't. And a lot of people, after learning that way of trading, right, they find that it's just too hard. And I've got a way that I show in my book using the VSA methodology how easy it is. Okay, it's not very hard at all. And the last reason why was because I like to impart my knowledge with traders and investors around the world. I've traveled the world teaching traders how to trade this trading strategy. All right, so and I've been teaching it for the last 5 years or so. Okay, so so I've seen the highs and I've seen the lows, and I can tell you a lot of horror stories when it comes to actually investing in the markets. But what I want to go through first is the lifestyle matrix. Okay, so a lot of people use their income to fund their lifestyle. Okay, so their income is their job. Okay, that's their primary source of income, and they try to fund their lifestyle, and they want this this lifestyle that they dream of, but they can't make it because the job won't get them that sort of lifestyle that they want. So then they turn to getting a second job or a third job. Okay, and there are people who use their income to invest in high risk strategies. Okay, and what I've found in the past is that a lot of people who use their income, their after-tax dollars, and put it into high risk trading strategies, right? They tend to blow up their accounts, okay? Or they have that fear that they don't want to lose the money, okay, because it's money that they can't afford to lose. Okay, so the way that I do my trading, right, is the following. I use my income and put it into low risk trading strategies. Okay, so the trading strategy that I go through in my book, right, is a low risk trading strategy, and the profits that I generate from my low risk trading strategy, I use those profits in my high risk trading strategies. So I'll go from the option strategies, right, the low risk option strategies, the profits I invest in Forex and futures. Okay, and it's then from that I fund my lifestyle. Okay, so the reason why I do this is because if you've got your money in low risk trading strategies, all right, then you won't be worried about the possibility of losing all of your money unless you do something crazy, but you won't be worried because it's a low risk investment. But if you put your money from your job straight into high risk investment, okay, then you start to worry and you can't afford to lose that money. So if it's gone into a low-risk investment strategy and the profits that from your low-risk trading strategy goes into your high-risk, that removes that that worry, okay? Because you are playing with money that you can afford to lose, okay? So if you so this is the matrix that I follow, okay? And I think people should follow it as well with their with their trading. Okay, so invest in low risk trading strategies and also invest in higher risk trading strategies. All right, but you want to invest in higher risk trading strategies with money that you can afford to lose. Okay, and that's the way to do it. Okay, so so I will be updating my book to version 2 soon, and I'll run through this a lot more in detail. Okay, so what do you guys think of that sort of method? Okay, cool, no worries. Okay, thanks guys. All right, so it's cool. All right, so let's move forward. So everyone's agreeing that's a very wise and a good way to approach trading. Okay, so how to produce an income on your share portfolio. Okay, did you know that you can rent your shares in the market? Okay, you can actually rent your shares. All right, so if you had a investment property, right, and let's say you just bought the property, you left it vacant, all right, and you had no idea that you could put a tenant in your property and generate an income on a monthly basis, right? So if you didn't know that, because you don't know what you don't know, all right? So and then I'll come along and say, hey, you know you can put a tenant in your property and they can pay you rent every single month, and you say, that's a brilliant idea. Now I can get the capital gain, because properties do go up in value most of the time, all right, as well as the rental income. And we can do the same thing on the stock market. We can rent out our shares on a weekly or monthly basis, all right, and generate an income every month or every week, or depending on however long you want to invest. All right, but you can do it on a weekly basis, so you can generate an income every single week. All right, and in my book I show you how to do that, how to rent your shares out. All right, so it's exactly like renting out a investment property. Now, to rent out our shares, we sell call options. All right, so when you sell a call option, let's say we sell a call option at, say, $50. Okay, now by selling that call option, the buyer of the call option, so we're the sellers, the buyer of the call option has the right but not the obligation to buy our parcel of shares for $50. Okay, and for that right they pay us a premium. Okay, so they pay us a premium. We get that premium up front straight into our trading account. As soon as it's transacted, it comes into our trading account. Now, what can you use? All right, what can you use that income that you've just received? Well, you can use it to purchase more shares. Ali, while selling premium in the present market is poor to low volatility, and that's true, all right? But there are stocks that pay a low premium, and there are stocks that pay a higher premium, all right? And I do cover that in my book as well, all right? So the best market to do this trading strategy is the US market. All right, you can do it in the Aussie market, you can do it in the London market, the Asian market, you can do it. But the best premiums, you'll get those better premiums in the US market. Why? Why would it be the best market to trade in? Can someone tell me? G'day Lance, how you going? Can someone tell me why the US market would be the best market to trade? It's very liquid, yes, but the US market makes up about 80% of the world's financial markets. Everyone trades the US market. The banks, all right, all over the world will trade in the US market, all right? So why wouldn't you invest in a market where all the money is, okay? And if it's where all the money is, then you get better premiums. But there are times when premiums fluctuate, and there are times when premiums rise, okay? And I cover that in my book when that happened. Now, at this time, with the US market, or the markets around the globe, the S&P and the Dow, they're all being bullish, all right? And if markets are bullish, then premiums aren't that high. That is true, but you can still find stocks that are paying a good premium. Okay, so that is covered as well. So by selling call options, we get paid upfront straight into our trading account, all right? And by being paid upfront, all right, we buy our shares at wholesale. Okay, so let's go through a example here. Okay, so this is a stock of well, this is the options table for the stock Apple. Okay, now Apple's currently trading, I think it's about 121, 122, somewhere around there. Okay, all right, so let's say, all right, down the right hand side here we've got the different strike prices, right? So let's say we sold a call option at $125. Okay, so we are saying to the buyer that you can buy our shares from us for $125, all right, at any time during the contract period, however long is that is, 1 week, 1 month, 2 months, 3 months, depending. So they've got the right to buy our shares for $125. So for them to have that right, they pay us roughly around about $1.71, okay, per share. Okay, so if you purchased 100 shares, then that means you'll make $171 up front. Okay. Now, if I bought my shares for $121 and received $1.71, right, how much have I really purchased my shares for? I've purchased them for $119.29. Right, so the $121 minus the $1.71. So I've in effect purchased my shares at a wholesale price. Okay, so I've purchased at a wholesale price. Now, just compare that to somebody just buying the shares at $121. All right, if the stock price starts to drop, okay, then if it drops below $121, then that person who just bought the shares is in a losing trade as soon as it goes below $121. But because we've sold a call option, all right, our entry price is really $119.29. So we've got a bit of a buffer here. All right, so we've got a bit of a buffer, and we won't start losing, all right, or having a paper loss until the stock price goes down below 119.29 cents. Okay, so that's what I mean by buying shares at wholesale. Okay, so this diagram here shows you the different strike prices that you can sell your call options. Okay, and the premiums that you will actually get. So if I sold a $100 call option, I can get $21.90 in premium. Okay, but in saying that, I'm agreeing to sell my shares for $100. Okay, so if the share price stays above 100, all right, then my shares are sold. All right, so I'll cover in the book in depth what it means, all right, and there's terms that I go through, such as in the money, out of the money, at the money, all that sort of terms that are used with trading options. I've covered it in my book. Okay, so my book's got everything that you need to get started in trading options. Everything's in there. I'm telling you, educators out there are charging thousands of dollars for this sort of information, and I've got it in a book, all right, for a normal cost of a book. All right, so you're getting a lot of value in this in this book. Okay, so I just covered that. So moving on, how to insure your shares. Okay, let me ask you a question. Would you drive a car without car insurance? Right? Yes or no? Would you drive a car without having car insurance? Right? And a lot of you are saying no. Of course you won't. Why? Why won't you just buy a car and stuff buying car insurance? I'll just drive it around. Why wouldn't you do that? Because of the liability in case of an accident. And in the stock market, there are always accidents. Always. All right? Did you know that you can insure your shares? So yes or no, did you know that you can insure your shares? And a lot of people are saying no. A lot of people are saying no, we don't, we've got no idea. Some are saying yes, but a lot of people are saying no. And finally, would you enter a trade with 100% risk? Yes or no? Would you enter a trade with 100% risk? And a lot of people are saying no. All right? And that's what people are doing when they just buy shares or buy stocks. All right? They're buying stocks. They're hoping for the share price to go up. They've got 100% risk. All right, 100% just buying, holding stock. All right, anything can come out. A news announcement about the stock. A profit downgrade can come out at any time without warning. All right, you got earnings announcements. You got news from from a sector, which will affect the stock. And people just buy shares and just, they've got 100% risk. And when it comes to trading, this is what I've found. When it comes to trading, a lot of people just look at the profits and they don't look at the risk. Okay, so when you're trading shares, all right, it's crucial that you buy insurance. And how do we buy insurance? Well, we buy insurance by buying put options. Okay, so I've got a table here. It's Apple put options for February. Okay, so if I purchased Apple at $121, I can go and purchase a put option, let's say 119. Okay, so what would that do? All right, by buying a put option at 119, that gives me the right to sell my shares at $119. All right, so the share price could go down to $100. The share price could go down to $50. All right, but I've got the right to sell my shares at $119. Okay, so what would you do if you bought a stock which was at $121 and plummeted down to $60? Right, so you lost 50%. What would you do? Right, type in what you would do if you purchased a stock and you lost 60%. Someone's saying close it. Would anyone hold the stock? Some are saying some are saying they'll probably hold it. All right, but if something has tanked, take up surfing. That's a great one, Ron. But if something has tanked, okay, why not? One, you could have saved yourself by buying a put option, or another option to recoup your losses is by selling call options, all right, and gaining back what you have lost. All right, and that is something that I cover in my book. What happens when the stock plummets? What do you do? All right, and there are different strategies, right, that you can implement to recover your losses. But the number one strategy is to buy a put option. All right, so if I bought a stock at 121 and I didn't have a put option, then my risk is 100%. But by having a put option at 119, I've got $2 risk. All right, I've got $2 risk, and that's around about 1.65% risk on that trade. Yep, 1.65%. Okay. Well, Gasly, a put option, how much it costs? It depends. All right. It depends on how far away you've purchased it from the current stock price. Okay, and it's different cost for different stocks. It doesn't cost the same for every stock. There's a lot of factors that come into how a option is priced. Okay, and that is also covered in my book. Okay, so there are a lot of factors, and the cost of a put is is different at different prices and for different stocks. All right, so it could cost you, if you wanted to buy a 121 put and you purchase the stock for $121, it'll cost you around about $2.34 to buy that put option. So in effect, your purchase prices will go up by $2.34, but you've got that protection. Okay, but when we normally buy a put, we normally buy just a bit lower than where we have purchased our shares. Okay, so it is crucial, all right, the number one thing, if you don't take anything away from this webinar, take away that you should buy a put option when you buy shares. Okay, and in version 2 of my book, I'll be going through a different strategy, all right, on how to protect your share portfolio. There's different strategies that you can implement, and that's coming in version 2. Okay, so throughout my book, I go through a lot of VSA principles. And with this strategy, now, if I haven't already told you, that this strategy is known as the covered call strategy. Okay, and the covered calls strategy, we are wanting the share price to go up. Okay, because the way I trade this is that I buy the stock, I generate a income, all right, and I create a profit up front, and I want to be exercised. So I want my shares taken away from me at the end of the month, all right, and I'm left with anywhere between a 3 to 9% return for for the month. It could be lower, or it could be a lot more, but normally it's around about 3 to 9% return on the US market. Okay, so in my book I go through these different principles, right? These different VSA principles: the climactic action, stopping volume, selling climax, bag holding, 2-bar or bottom reversal shakeout. Now the reason why I go through these VSA principles, because they are what I look for when I'm trading the covered call strategy. Okay, so if I get a shakeout, all right, what do I look for after that? So what do? I set a trigger point. All right, I set a trigger point, and then you'll find the stock will come down. They'll test the market. They'll push it up. They'll push it back down, and finally they'll break above our trigger point. And what are the two principles that I would look for to go long? Right? Do you know the two principles that I would look for to take a long trade after I see a shakeout? Can anybody tell me? What are the two signs of strength, or two principles that you would look for after you see a shakeout? Surge, yeah, no supply, and what else? There's one more, and a test, correct. That's right. All right, so they're the two principles that I'll look for once I get a shakeout. All right, I set the trigger point, and once the price goes up above my trigger point, then I'll look for no supply and tests. Okay, and this chart here is a chart which shows stopping volume. All right, and this is a chart of Apple. All right, we can see the stopping volume, massive volume. All right, and price does stay above our trigger point here, but look, we get testing at that level. Okay, so it's really quite simple. This is a stock of Adobe. Okay, Adobe here. Yeah, these are the sort of stocks that I look for. Stocks that are trending. All right, I don't want something that's going sideways. I want something that's uptrending, because as they say, the trend is your friend. All right, so you want to follow the trend. And normally in a trend, we normally get stopping volume, shakeouts. They shake out the traders, they stop them out, and then they continue the price up. And this is what happened here. Now with Adobe, we had a earnings announcement, all right, and they shook the market out. The earnings announcement was poor, all right, so there was a shakeout. which forced all the traders out. And then a few bars later, we got a test, and it continued the trend. It's very, very simple. A lot of people make this complicated, and it's very, very simple. I just look for those 5 or 6 principles, all right, and set my trigger point, and then look for tests or no supply. Okay, so you don't really need to complicate it. All right, you have to, it's the KISS method. Gaisley, can you do that without the symbols on the chart? What do you mean, mate? Can you clarify? Well, well, like you can. Now, without having the symbols on the chart, you can, but it's a lot harder to read if you don't have the actual experience. Right? I still, because I've been doing it for the last 3 years, the VSA method. I like having the principles show up on the chart. Okay, so it'll make it a lot easier for you. Okay, but there are traders out there that do it without the principles. That have been training for 10, 15, 20 years. Okay, this is just some comments. Yeah, so when I'm looking for trading principles, I use the Trade Guider end of day software. Okay, and for people who are readers of my book, there's a special deal that you can pick up the Trade Guide end of day software at a very low price. Okay, and that's only for the readers of my book. Okay, and you'll get a great deal with the Metastock data feed, which plugs into that. Okay, but pick up the book and you'll see there'll be a page in there which gives you the deal to pick up the Trade Guide end of day software. So I'm just reading a comment here, guys. Yeah, Lance, you're very correct in what you're saying. All right, there's some options do not move favorably in line with the stock. Now that's why when I'm looking at trading this strategy, right, I've got a set of rules which I'll go through. All right, I've got a set of rules that I go through, and it's a very strict set of rules that I don't come into this problem. Okay. All right, so let me just go through the stock selection criteria. So I've got about 7 rules that I go by, and each rule has to be met before I even consider taking a trade. Okay. Okay. Sorry. Just before I go on to the stock selection criteria, just a few questions here. How do you set your stops for options? Well, William, we use put options, all right? And the put option, okay, basically allows you to sell your shares at a certain price, all right? All right. So if we bought a put option on Apple at $119 and it went down to $60, well, we've got the right to sell our shares for $119. So that is our stop loss. Okay, so we use put options with our stop loss. Okay. All right. So the deal with the end of day software is basically half price. Okay. So where okay. All right. So if I go back to this Adobe chart, we can see that it's an uptrend. All right. We've got strengthened background. We've got shakeouts occurring. There is strength. All right. So these are the sort of setups that I look for. Okay. So we want strength in the background. So what gives us that strength? Well, we've got shakeouts, we've got stopping volume, we've got a selling climax, and bag holding. That's strength in the background. All right. If you see bag holding, all right, that is one of the strongest VSA principles to go long. All right, get excited. All right, doesn't mean, well, some people may get in straight away, but I don't. I wait for testing back into that bag holding level, and I want to see a push off that level. Rule number 2: stock is in an uptrend or performing better than the parent index. And in the trade guider software, right, you can actually scan stocks against their parent index. So if you wanted to scan the S&P 500, right, so all the 500 stocks in the S&P 500, well, you can through the trade guide end of day software, and what it scans against is the actual S&P 500 index, right? And what is returned is the top 10 stocks that are strong and the top 10 stocks that are weak. Well, I focus on the strong stocks. All right, so that's one way you can get trading candidates, by doing a scan in the trade guide at end of day software, getting your strong stocks, and then looking for those principles. Sergio, yes, it is being recorded, mate. Okay, so it'll be going on the YouTube channel. Gasly, yes, it does work in high volume shares. Okay, and I'm about to reach that point in a second.
Danny, just so you know, mate, Richard's now put your PDF book as a download in the bookstore on the Trade Guider website. So it's now there. It's just the book. Okay. I've put the link in the room as well. I think it's just trade. I believe it's just tradeguider.com.
That's right. I'll
/books.asp. There you go. Tradeguider.com /books.asp. But I posted it in the room so everyone can see it, and we will email it with the recording. All right, mate. Well done. Cheers.
No problems. Thank you. Okay, so my third rule, all right, is in a uptrend, I want to see confirmed tests or no supply. So if I get a shakeout or a stopping volume or a selling climax, I want to see a test back into those areas of the shakeout of the stopping volume. And if I get that, then that's a possible long trade. All right. Rule number 4 is no earnings announcements. Okay. Why do I say that? Why don't you want to trade around the earnings announcement? Can somebody tell me? Yes, the share price can collapse. Correct. All right, so you don't want to be in a trade, all right, that you've purchased a stock, you've sold a call option, and the stock plummets 20-30%. All right, you don't want to be in that situation. So I look for stocks that don't have an upcoming earnings announcement, all right, within the period that I'm selling my call option. Okay, so that's very, very crucial. High liquidity. Okay, and there's a quick question here by Gasly. Does this only work with high volume shares? With this trading strategy, I only focus on stocks that have got high liquidity. All right, meaning stocks like Apple, you know, stocks in the S&P 500, in the Dow, in the Nasdaq. Okay, that's what I primarily focus on, those sort of stocks, because they are highly liquid. They are traded a lot. Right, there's a lot of volume. Okay, I don't want to be, you know, I don't want to do this, you know, trading strategy on a stock that's not liquid, like a stock that's sitting in the, you know, in the Russell, or, you know, or a low priced, you know, stock that there's not much volume. I don't want to be stuck in those sort of shares. So I focus on primarily stocks in the S&P, stocks in the Dow, and stocks in the Nasdaq. Right? And they're more of your blue chip stocks. Now there's some stocks within those indexes, some are a lot more volatile than other stocks. Okay, so you can pick, pick and choose. Like, you know, you can, you know, add a rule to your criteria to say I only trade high volatile stocks. Okay, or I only trade low volatile stocks. Okay, and the IBD as well. I've you know, used that in the past. That does give you some you know, stocks that you know you could possibly trade, and it's all based on earnings and so on and so forth. I think it gives you like the top 50 stocks or something like that. So that's a good resource that you could use as well. Okay, but stocks with high liquidity, and how do we know whether a stock is highly liquid? All right, so if I just bring up a option table, let me just bring up Google Finance. I'll be 1 second. All right, so if I look at the stock Apple, all right, and I look at the option chain, all right, here we can see the spread between the bid and the ask price is only 3 cents. All right, it's only 3 cents, meaning that this is a highly liquid stock. A stock that's got a wider spread, say $1 or $2, all right, that is not liquid. Okay, so a stock like, I think it was 10, TEN, here we are. If I look, that doesn't show me the options, but this one, MDCO. Okay, we've got the option chain here. Oops. All right, we've got the option chain. Look at the spread between the bid and the ask. It's, you know, $2. It's over $2. The spread. So what does that mean? So let's say if I bought a call option at $10.90, all right, and I wanted to sell it back to the market. Well, at this stage, it's only worth $7.10, so I've lost money. Right? So it's a $2 difference, and the stock needs to travel, needs to rally quite a bit in order for you to be in a profitable trade. Okay, so that's why we focus on stocks that got smaller spreads, all right, and they're a lot liquid. All right, so Apple is a lot liquid than that stock MDCO. Okay, so that's what I mean by high liquidity stocks. Rule number 6 is no pharmaceutical stocks. I do not trade pharmaceutical stocks whatsoever. All right, I don't even look at them. All right, and a lot of pharmaceutical stocks do rally if they have it's called the FDA approval. If they're doing some sort of trial, all right, and they get approved, then the stocks rally. All right, but there's a lot of them that don't, and they don't get approved, and their stocks plummet 40, 50, 60%. Okay, so so I don't, and that's the reason why I don't trade pharmaceutical stocks, all right, because of that fact. And lastly is I don't want to trade a stock that has a dividend. Okay, so no dividend announcement. I don't want a stock that's going ex-dividend. Okay, because the reason for that is because the stock will fall the amount of the actual dividend. All right, so I want to steer clear of that. So that's my selection criteria, and I'll go through in my book that criteria, and I also have my trading plan that's in the book as well. Okay, and go through everything. Okay, everything ranging from the following. So in my trading plan, I cover my pre-market daily routine, my goals, my purpose. Okay, I look at trading as a business, risk and money management, position, exit, and capital protection. I look at technical entries. Okay, I also look at fundamental entries. Okay, option position entry, sizing. All that is covered, and what I do after the trade. Okay, so all that is covered in the trading plan that's in my book. Okay, so yeah, so that's it, folks. Now, if you wanted to purchase the book, you can go to the following website. Go to tradeguide.com, and if you click on store, and under the books and ebooks, you'll see, well, it should be there. Here we are. It's the second one from the top. Okay, Supercharge your trading and investment account with Wyckoff VSA. Okay, so that's there right now for you to purchase. Okay, any questions, folks, before we wrap it up? And Gavin, if you got any last words at all?
No, mate, that was very good. I did manage to listen into all of it. So, yeah, brilliant. I mean, I think you've covered... I mean, what we've decided to do, guys, is to feature Danny once a week in a webinar to take you through different aspects of things. Just want to warn you guys as well, we've had an end of a rising market signal on the E-mini S&P futures contract, just so you know, on the 4-hour chart, followed by an upthrust. Just beware of that. I think that will be traded next week rather than today. And for those of you that are interested, I'm short gold. So still short gold at the moment, up from 1187, and we're just seeing a bounce off 1180. So some interesting movement in the markets today. Steve Phillips will be in at 2:15 to do the live trading room. Of course, you're all invited. I think you've all got invites for that. It's a public day today, and I think you can all congratulate Danny there. I think he's done a super job with the book, and I can tell you, as I say, I've got a lot of professional traders that we proofread that book before it came out, and all have come back with very glowing references about the information in the book and the way it's presented. So I'm sure it'll be a big difference to you. If you want to find out more, I suggest you speak to Danny. Hey, Danny, if they want to get in touch with you, I mean, there's lots of questions in this webinar that you couldn't get to. I appreciate that. How do they reach you?
Okay, the best way to reach me, guys, is by sending an email to danny@tradeguider.com. Okay, the link's in the room now. Okay, yeah, just send me through a email, and like Gavin said, on a weekly basis, I'll be looking at doing a different session on different sections of the book. Okay, so so I hope I've taught you something about options, and you'll learn a lot more, you know, with what's covered in the book. And it's one of those trading strategies that I think that all traders should have in their trading arsenal, because it's a low risk, you know, trading strategy. It can generate you that income that you need, and you can put that income towards, you know, higher risk, you know, trading strategies. Not sure what's going to happen with the updated version, because it won't be just a single chapter. It might be you know, a few you know, chapters being added up. So I can't tell you as of now if it's going to be free or if there's going to be a charge. I can't tell you right now because I haven't finalised you know, exactly what I'm going to put in version 2. But it'll be, you know, other strategies as well. I most likely will put in there. Okay. All right. So thanks, Kyriakos. Thank you very much, mate. So yeah. So if you've got any questions at all, please send me through an email, danny@tradeguider.com. It's available. The book is available now for all TradeGuider clients. Okay, you can just go to tradeguider.com/store.asp. The hard copy, I'm currently it's getting finalised on Amazon. Okay. So they're just going to, you know, approve the artwork, the front cover of the book, and the actual book itself. So I'm guessing by next week it'll be available on Amazon. Marin, the way you can get the book right now is by going to tradeguider.com/store.asp. Okay, I'll post it in the room. All right, so that's where you can get the book from. Just navigate down to the books and e-books section, all right, and click on the click here for details, and it'll be listed there. Okay, as you can see. The page, I think it's about 130, 140 odd pages. Okay, the book. So, Lance, if you missed the first part, we have recorded this, so it'll be available on the YouTube channel. Okay, so, and we'll be sending out a link to that video, so, and to how to purchase the book as well. Okay, no further questions. Okay, all right guys, thanks a lot for coming along. You know, the book was a long time coming, but I finally got there. I hope you enjoy it. I hope you learn something from it, and I hope it helps you with your trading. Yeah. So, like I said, any questions at all, just email me any questions, and I'll be you know, happy to help you. Okay, guys. Have a great day, night, wherever you are, and I will see you in a future webinar. Okay. Thanks a lot, guys. All right, and have a great weekend. Thank you, Victoria. Okay. All right. Thanks a lot, guys. Take care. Bye for now.